LiteFinance, the world of financial freedom.
Hello, it's a Tuesday, March the 8th, and we start a new week in the markets. In this material, I will focus on the current situation on the commodities market. It begs the question, will we face a price Armageddon if Europe and the US block the import of gas and oil from Russia? Then I will discuss the upcoming macro events for this week, i.e. the US inflation data and the ECB meeting at which we can get the first signals about interest rate hikes. Okay, so maybe let's start with the question of banning gas and oil imports from Russia, because it is getting louder and louder on this topic. The price of oil is going crazy due to these reports. Everyone wants to protect themselves and stock up on them. Additionally, Japan is joining the whole action, which of course does not do it selflessly. Let us recall that Japan did not sign a peace treaty with the Soviet Union after the World War II, because the Russians have occupied and have not yet surrendered the Kuril island located north of the main island, which the Japanese consider part of their territory. However, they refuse to comment on the matter. So it is still a long way to the end of the conflict, and the vultures are already flying over the battlefield. So, coming back to the heart of the matter, will they ban the import of commodities? I think the analysis of potential costs versus the potential profit that can be achieved speaks in favor of refraining from this decision. On the part of Europe, the problem is the low stocks caused by the lockdowns and supply shocks, and too much dependence on gas from Russia. In turn, the Americans, while importing only 8% of their demand for commodities from Russia, the most important thing for them is the stability of international commodities markets. So the situation would be different if, number one, the OPEC countries such as, for example, Saudi Arabia would be willing to increase production. However, and there they have their reasons not to do it, and also want to gain something from the situation. I'm talking about the war in Yemen, which is very costly, and that they seek US help to resolve this conflict. In addition, in terms of quantity, the USA would be able to supply domestic market and European Union countries with gas as well, but the delivery of such supplies takes time. On the other side is Russia, heavily affected by sanctions. Trade with the EU accounts for about 40% of all Russian exports. And on the one hand, you can think, as we described a week ago, that Russia will find sales in China or India, but it should be noted that most of it is transported to LNG terminals, not via pipeline, which means that it is not that attractive in terms of price. Analysis by JP Morgan or Bank of America indicate that if Russia were cut off from international oil markets, a commodity shortage would bring the price to $200 per barrel. Such a picture of the situation leads to the following conclusion that so far it would probably be too big a risk for Western countries, and so everyone will wait for the situation to develop, because so far the protracted conflict hurts the Russian side the most. We must remember that the higher the price, the more extraction methods become profitable, and the producers will extract more oil to simply earn as much as possible during the time of high prices. So you just have to be patient, because this crisis will end at some point. Therefore, I recommend that you follow the reports on the topic of new drills being opened. In the US, for example, President Biden has issued more drilling permits than Trump, despite being a green reform advocate. By the way, note that the price of oil previously rose, but slowly, due to the still existing risks of lockdowns. And now let's see what happens. You can't hear anything about any restrictions. Suddenly, the risk of closing economies is gone, and the price goes crazy, as economies are still running high. And now there is the threat, on the other hand, that suddenly there may be no oil to fuel the economic machine. So okay, I think we can move on to the US inflation data. Then what significance this could make? In recent comments, Jerome Powell suggested that he would support a 25 basis point rate hike, but if it turns out that inflation will not fall as expected, he may opt for more radical steps. So yes, if this week inflation reading remains at the current level or increase just slightly, it will not be tantamount to a 50 basis point hike in March, even though the Fed assumed a decline in inflation at the end of Q1. Due to new circumstances related to the Russian attack, the situation changed slightly. As for the ECB, very briefly, because there is no question of a raise in the current situation, but we could potentially receive the initial plan, because last time the head of the ECB, Mrs. Lagarde, withdrew her words in which she declared that there will be no increases this year. So now let's go into some charts. In the case of Euro-USD, we need to wait for a confirmation of a particular direction. Right now we sit at a very strong support level and the price currently might go in both ways. Still, right now it is suggesting to us that upward movement is rather happening, but you need to stay on guard. What I would do is go for a lower time frame like H1 or 30 minutes and check for some reversal patterns like inverted head and shoulders or triple bottom, something like this. So next is Brent oil, which still is very risky to trade, but what we need to do here is to wait for the price to settle in those levels marked with the rectangle. It is very important because the price is right now evaluating the risks and possible scenarios. You can see spikes in both ways, so look for confirmations either to the downside or upside at the rectangle boundaries. So for today, that would be all. Thank you for watching and I'll see you next time, guys. Take care, bye.